Hey guys, my name is Dontez Lindsay. I am the General Manager of Ducks Trading LLC, as well as the lead trainer of StockCraft. Before I go any further, just a little disclaimer. I am not a financial advisor, and this is for entertainment purposes only. With that out of the way, I want to get into the content today, which is pretty much another recap of the previous tickers that were worth trading in the past 2 months. Now, I will say in the past 2.5 months, small caps have been pretty dead. There's nothing that has been ideal enough for most people to come out, but I will pay attention to a few of the ones that were worth at least a partial trade. So with that out of the way, let's get into the video. So first thing I want to do is kind of give you a little bit of a heads up on what we're going to go for. Main tickers we're going to go for today is KSCP and INN. This happened on January 31st. And long story short, we saw a ticker go from $6 to $27. So that's over 300%. And it opened after having a large dip, and we were trying to get into a position where we could flip a position. And so pretty much I went in at 19, and I had plans to cover it at 24, and then eventually flip my position to ride it all the way down. On INN, this was a ticker that went from $2 to like $3.50 with resistance in the $4 area. And I will show you what happened in the video. So I put together some snippets to show you guys how I'm trying to figure things out, and how during the trade, I'm also trying to spot key points, profit targets, and just other all details that are important to have, and just trying to stay sharp for when the actual ideal plays come out. With that being said, let's get into the first one.
On KSCP, and not only did I like overcommit, but I went in, I was up 15%, now it's down 15. I went up about 15%. Now it's at the like break even part, but I'm also, it's already happening. Also pretty confident that like this isn't going to drop, because at first I was like, okay, this has like 300% extension, but it doesn't have any like consolidation, and there's no accurate like float or market cap and stuff out there. There's a few, how do I say this? There's no back order strapped up here. Like they're all like very loosely there, and I kind of feel like this is actually something like a really small float, and I'm only aiming for like 20% on this, so I'm aiming for somewhere like minimum 22.7, maximum like 24. If I get 24, automatically just covering everything. I gotta turn up this limit order. For INN, I almost went in at like 315. That's how I realized that it was only up like 30-something%. Because I have history with INN, and I see how like fast this can move. And only every 30 cents is like 10%. And so like, and I held back my greed on this so I can focus on this one. For INN, I'm actually trying to short this when it gets closer to its like previous resistances, which is somewhere closer to like 4. It actually gets closer to 5, but I don't know if a lot of people are going to be able to wait that long. And they'll start like covering the positions around like.
Okay, I'm going to skip ahead.
Other than that, we just halted on KSCP, so that's cool. I was almost like really greedy, and not greedy, but like I was almost just gonna settle for this small gain here, which would be okay if I had like a very systematic system. But I have more of like an intuitive one, and even though it was into strength, it wasn't into like intraday, and that would like give me bad habits of like just doing limit orders back and forth. And so the only reason I use a limit order this one is because it's pre-market, but like getting out that just feels a little different.
Okay, so with that last comment, I pretty much explain how I try to play this game between being a robot and something of a swordsman. So pretty much I say my system is kind of intuitive, which pretty much means like pattern recognition, and like that's it at its like fundamental, something unconscious that you can just feel this is the right moment based off of like your accumulated knowledge. On the other side, it's more of straight systematic. Like you get this amount of profit, you get this amount of percentage, you pull the trigger. Done. Now, before that, the first 2 minutes, that was me just giving rough information on why I didn't pull the trigger in this first dip right here, and how I would normally look for some confirmation in terms of price action before I would just confidently pull the trigger. And I was trying to explain how that wasn't greed, and like how I didn't have any fear when it came back because I was confident that it still had room to grow. Other than that, like that's all I really wanted to say with those 2 snippets. So let's get to the next one.
Outside of that, I'm just gonna get ready for, this unholds it, it's at 24, I'm getting out. Where'd you go? Yeah, went on. Okay, good to cancel.
Rejected.
You're rejected.
Rejected.
It's a good cancel, get out.
Rejected.
I don't like this person.
Rejected.
Isn't the good to cancel? The one where like it doesn't matter whether it's in a hold or not. As soon as it opens,
Rejected.
it's supposed to execute. Okay, fine. I'll just do the day. I don't even care. Like I win either way. You have your way. But with that, I don't like how I'm already losing 8%.
All right, so with that snippet, that was just me trying to use my good to cancel knowledge, which was very limited by that time anyway. So good to cancel is only used for those halts that go like days. And it's pretty much saying your order is going to be canceled at the end of the day, or it can follow a trade for like specific weeks. The only time you're actually supposed to use it is when you're in that specific scenario where it's not a T12 halt. It's something very extended, and there's a high chance you're going to forget about your trade, and so you're just going to do good to cancel. But when it's just a normal 15-minute up to like couple hour halt, just do a day order. So that was, again, me just trying stuff out live, and I do that. Now let's get into the next snippet.
As soon as KSCP is done, I'm pretty much gonna wait till that has some type of consolidation, or like goes at least to like 29 before I try to short that. With IN and N, at least that has some type of history. FGI, it's kind of in the same boat as KSCP. Yeah, like previous day, it was $3, and so in pre-market went up to 8, so it's almost like 300%. But with KSCP, it did go for like 300%. And now if it does like something closer to a double top, we're getting paid, or at least we're gonna shoot our shot with a pretty tight risk, because at the end of the day, it could just be a second green day, which you always know that you're not supposed to short to a second green day. 38%, or not 38%, 38 cents per share. Now it's at 24. This could be like a little fake out area from that. Like if I short it like right here, I'd only go in like a third of what I wanted to go in. Yeah, I still wouldn't be safe. Not yet. I was thinking like overextended gap down type stuff.
All right, so I just put those last two snippets together because I pretty much wanted to show you that these are the key points, the profit targets, and like just the info that I was focused on, and what I thought was the best points where things are going to tip and where I could read the stock. And so just to go back over that a little bit, I pretty much was saying 23 to 24 is like a very heavily traded area. It's been tested several times in the pre-market. And so this is a point where if I had to shoot my shot early, I would take partial of my entire borrowed position starting there. But I'll also stay aware of the potential to fake out, not only above the 23 or above like the 23, 24 area, but also above the 27 that was created in the pre-market, which pretty much puts me at 29. And so remember, I took a long around 19 and I had a systematic target to cut it at 24. With that, I was still waiting for an opportunity to flip my position. Long story short, I ended up having some broker problems, and instead of calling the broker like you're supposed to, I just thought the problem would solve itself, and I went to go do other things, and every time I came back, the problem would still be there. And eventually I just took my little profits that I had, and I was okay with that. But with that, I actually missed out on making another potential profit. That's all I really wanted to say with those two snippets. I have 3 more, and they're not that much, so let's get into it.
Ideally, you want to short right now. Big disappointment. Yeah, like ideally, well, so when I say like ideally, I wanted to short in KSCP. There's like 3 criteria, but 3 signals that would be like, this is the ideal moment. So like, there's an ideal moment for me, there's an ideal moment for the stock, and then there's an ideal moment for the pattern. For me, I have to be in a certain like amount of like conviction to be able to hold it through what I think is gonna happen. Like, the good, the bad, and ugly, and then hold it like the correct amount of time until the pattern like breaks. Now for now, because it went up to like 27 in the aftermarket and then gradually faded down, but it faded more than like the typical was overextended gap down kind of stuff. This isn't very consolidated, so I can't really use that confidently. But there is obviously tested points at like 23, like coming down, like right here, 23, going up 23. Same thing like right here. Now, what was I saying? Fake out range is like still what it's doing right now, and it's more like the stock is ready, but I'm not ready, and I didn't like sleep as well as I wanted to last night, and so I'm okay just like taking my win already, and so I'm just like chilling. But main thing is I also don't want to get into a bad habit of doing that, just straight up making an excuse and not pulling the trigger, and so that's why I give myself a specific time limit to adjust. And so when I said that 10:20, if I go in earlier, I lose trust in myself in some type of way, and I'll sabotage myself in the next trade, even though this trade has nothing to do with the next trade. I'm going to somehow connect the two because that's just how I am. And yeah, that's where I'm like, okay, I go in at 23, but I also have like, at least 3 different angles of which I can rationalize, justify, and say going in at this time at that number is the best for me.
All right, so a little bit on that. Pretty much, I was trying to say there's 3 ideal signals for my execution of a trade. Either I'm ready to go in because I'm intuitively picking up some type of pattern recognition, or the systematic execution of the pattern recognition and opportunity window is obviously present right there. And then the last one will be more of the stock itself in comparison to recent like price action, like of that week, or that like some type of relative term. In each one of these 3 situations, there's an opportunity for me to shoot my shot and not be as emotional and have enough conviction as well as like resolve to hold through anything that would like juke me or like shake me out in the short term. Because at the end of the day, we can scalp and make profit, but we're not trying to do that. We're trying to have quality over quantity, and we're trying to get past the point where we can easily be shaked out by these fake outs, by these the going in too soon, going in too late kind of mentality. And at the end of the day, you just have to shoot your shot when you see that window open, but you also don't want to get in there too soon because it makes the chances of you taking like a slightly bigger loss or hedging your profits a little bit more than you wanted to. That's all I really wanted to say at that one. Last snippets.
Goes up one step, closes strong. Is a higher chance it's going to close strong. Like, it was a different market back then. Like, you buy anything and it would just go up. And so I just remember watching something on, it wasn't DVD. I think it was like someone's chat room. It was like, oh, check out this step pattern. I'm like, all right, I got that. I was like, that one's easy. I can do that. Yeah. But gotcha. Yeah, I noticed that too. I always saw it as a consolidation right before. More bag orders since most people don't really trade after 4 p.m. Yep. I always see the people that trade like post-market and like, really early in the morning in the pre-market, like as a different breed. Like, since there's a lot less amount of capital needed to like move the stock, I could never really judge whether they're like just, not market makers, but like people pumping the stock with like a lot of money, or if they're just like a lot of people coming in. And so I was like, is this one person, or is this like, everyone, like, I don't know. And so I pretty much have, I'm not calling them Smurfs, but like I definitely have a set imagination of it. But it's just for like my personal, like, I'm certain this is what it is. Now, if I actually find out what it is, it's probably going to destroy my whole sanity. So I'm not going to share because you guys are probably going to spoil my fun. My way is more fun. So that's going to keep me coming back. So I'm keeping that a secret.
All right. So I'm going to leave it at that for now. That last part, I pretty much was trying to say most of the traders out there, they live in ambiguity. They live in an illusion. They live by their testosterone. They're like, their confidence made into something not tangible, but something that like drives them towards, keep coming back. And then also a few other of similar kind of categories to help them trade better. At the end of the day, I have my delusion or illusion that I like to indulge in, and everyone else has theirs, like whether they're a god, whether they're Smurfs, or whether, there's just always a bigger person behind the screen. They all have some kind of fantasy. At the end of the day, I choose mine. And I think having that kind of playful spirit is going to ease the stress when you're dealing with trading. Because over time, that stress can accumulate. And the longer you hold that in, the harder it's going to be to keep your mentality intact. And so you want to have fun with it. And then have something outside of your trading to balance the stress that comes from your trading. Like, at the end of the day, you're responsible for everything that happens in your account. So if you want to do it cold turkey, be realistic, be rigid, and all this other stuff, that's up to you. But that's just what I like to do, and that's what I'm sharing. Last thing is, I think I forgot to mention this point, but someone asked me about why I didn't like limit orders. Pretty much that goes back into the idea of once I admit that I know something, it gives me a certain bias towards being right. And as soon as I have that, I have to be right, my mindset of like probability and other kind of intuitive recognition process just gets focused on being right, and I can like never be wrong. So that's why I didn't put like a limit order when I think it was mentioned a few snippets ago. Other than that, what we went over today, we went over KSCP, we went over IINN, and INNN was a bounce short, and KSCP was either a second green day or a very overextended gap up short that went into the next day and then finished pretty weak. At the end of the day, it wasn't ideal because it did have the extension we wanted on the first day. Second day, it wasn't as clean as we wanted it to be, but it did have the potential to have profits. On INNN, it was a bounce short. It had the minimum extension, but it didn't actually extend enough to the point where it got around the resistance to my comfort level, at least. So I never took my shot. And that's why I brought these two tickers up. Because at the end of the day, these were two tradable tickers and you could have made money off of them, but they were not ideal to my standards, as well as a lot of other short sellers outside in the market. All right, guys, if you liked the video, like and subscribe, and I'll see you in the next video. Peace.